So we said 4.2? All right, good. So starting right here. What's the first one? Their year end is December 31st. We're on page 206, guys. December 31st, it is December 31st, 2014. They've made all their source entries for the year, all the debits and credits for every transaction that happened. And now we're at the end of the year, and we're going to do financial statements on September 1st. They collected 6 months rent for $8,400. At that time, they debited cash. Well, of course they did, and they credited unearned rent revenue. So what do you want to do? Everybody formulate an answer. What is it? How would you approach this? What would you do? You're going to see something just like this, I guarantee you. Just like this. What is this? Accrual or deferral? That should be instant. What if I asked you something simple like that? Well, wouldn't that be cool? Deferral or accrual? Are they deferring revenue here or accruing revenue? Deferring it. How do we know it's deferring? They went to unearned rent revenue. It's a liability. They deferred recognizing the revenue until later when they earn it. So what did they do on September 1st? September 1st. What was the entry they did make on September 1st? Debit what? Just told you. And I would just say they debited, I wouldn't tell you what they debited for crying out loud. That's pretty obvious. Okay, they got cash. I would tell you they credited a real account or a permanent account or a balance sheet account. What account is that?
Unearned rent revenue.
Unearned, is it rent?
Yeah.
Unearned rent revenue. Absolutely, that's what they would have done. Okay. So when is it now? December 31st. They are not doing monthly financial statements. They have not made entries to recognize any of that revenue. Recognize means put it on the income statement, doesn't it? Right? Recognize. We did recognize it on the balance sheet. We have just not recognized any in the income statement. Right, guys? We haven't put it in the income statement yet. Oh, she's counting months. I love it. Okay, how many months has it been? 4. Remember, you got to include September 1st. If it's September 30th, don't include September, right? Read carefully. Okay, so it's 4 months. So if 4 months went by, well, how long was the rental for anyway? You're supposed to be doing this. You're not doing your job. How many months was the thing for anyway? What does it say? 6. She's asleep today. Okay, so 6 months. All right, 6 months. Hey, they used 4 out of 6. What's that? Maybe 2/3 of it? Everybody agree with that? So it's December 31st, so what? We earned 2/3 of it? What's 2/3 of 8,400? Somebody want to do that for me? How much is it? 5,600. 5,600. What do you want to debit?
Rent revenue.
Unearned rent revenue, right? The liability goes away. Doesn't it? You earned it. You don't owe it to them anymore. You let them use the property. You don't owe them the use of the property. Okay, and you credit what? Rent revenue. This is too easy to believe. Okay, what's left in unearned rent revenue right now then, relating to this one? Could do it this way. Think about it on September 1st. We did this in our head, didn't we? We put 8,400 in here, right? And then at the end of the year, what should it be? Rent revenue, we just decided, should go up to 5,600, right? This one should go down by 5,600. Everybody agree with that? What's left in there? 2,800. What's that? 2 more months. 2 months next year. Right, guys? Is this easy or what? Can you memorize all these? No. Can you understand what the hell you're doing and never miss anything? Yes. We will have people on this test score 90%, and we will have people score 10, 12, 15. I'm not kidding. So the people who get 90 are 9 times as intelligent as the people who get 10. Is that right? No, the people who get 90 know what they're doing, and the people who get 10 don't. Who would I hire if I were an employer? Who would you hire? You're going to give them your money to do something for you. It's a no-brainer. They're going to look at your GPAs, you guys. All you guys have when you go to work is your GPA. Nobody cares what my GPA was in college. Nobody cares what it was in my master's program, in undergrad, in my master's program, in my PhD. They certainly don't care what it was in high school. I don't care what yours was in high school either. If you were a 2.000, can you graduate with less than that? Probably, right? Maybe you can graduate with a 1.0, I don't know. If you were a horrible student in high school because you flaked out, goofed off, had a lot of fun and all that, good for you. Do it now. Do it now. You get a good GPA out of here, nobody's going to look at what you did in high school. If you were a 4.0 in high school and you go through this place with a 2.0, you are not going to get a very good job. Nobody cares what you did in high school. Sorry, it's what you did for them lately. Nobody cares what I did 20 years ago either. Nobody knows, nobody cares. So they're going to get rid of me as soon as I quit delivering. Got it? No, I have tenure, that's right. Nah, I get rid of you. Can't get you if they want it. They can decide I'm too old to work, which I am. So just ask me and I'll tell you. Okay. Ask my wife, though, I'm not. That's some money. Okay, anyway. So, we got that one. We can do the second one. Okay? She's ignoring you. You're doing the second one. Okay. What's the deal? When is it, you guys? October 1st now? They did something. What did they do on October 1st? About 18 grand? Sign a note. I guess they got cash. That was it. What journal do you want to make it October 1st?
I would want to make, we want to debit cash.
Absolutely. How much was it?
18,000.
Great. Credit?
Credit and it's payable.
Yeah, this is easy. And signed a note. Why is it not an account payable? Because you signed a note. What if you hadn't signed a note? I guess it would be an account payable or something. What if you? Okay. Bank never happened. So they're not going to give you money without signing a note. What about the 12% interest in the maturity date and all that stuff? Looks like it's, is it 1 year? Yeah, September 30th, 2015. It's 1 year. And it's 12%. Is that 12% a month or 12% a year? A year. It's always stated per year unless it says it's per month. Here, if they told you it was 1% per month, you can figure it out, couldn't you? Right? It's the same as 12% a year, except it compounds. So we'll worry about that later. Okay, anyway, so 1 year, 12%. So what do you want to record some interest now? Why not?
Because
We haven't incurred any. That's it. By the way, when we make this journal entry, is this going to be an accrual or a deferral? What's the entry going to be at December 31st? We now are going to owe interest, but we won't have paid it yet because it's not due until when? September 30th. Due September 30th of next year, right? So, yeah, December 31st, we're not going to give them anything. What do you need to do? You need to record the interest what? Time went by. I got the use of the money. I used the money to run my business, generating revenues, we hope, right? Trying to generate revenue. This is going to be interest expense. Of course it is. Okay? Interest expense. Right? If I was paying my credit cash, I'm not going to pay them. What am I going to do? I'm going to accrue it as interest payable. Excellent. Okay? How fast can you do this stuff? Oh, man, there's nothing to it. There's just nothing to it. Okay? How long have we used this money this year? I don't want to record all the interest for the whole time. I'm not going to take 12% of 18,000 and record it. The whole time didn't go by. How much time went by? 3 months. Excellent. So I think I'll do 3 months interest. What do you say? So what's it going to be? 18,000 times what? What would it be for a year, everybody? 12%. 18,000 times 0.12. Except it's not a whole year. What portion of a year is it? 3/12, right? 1/4 of a year. 3 months out of 12. Right, guys? This is too easy to believe. So you just multiply that out, huh? How much is the interest for the first 3 months? 540 bucks? Okay, is that what it was? Everybody agrees? Big deal. So how much do I owe them? 540. What should I put in my balance sheet? 540. Credit interest payable. Right, guys? How much interest expense have I incurred so far? The cost of renting this money. You can think of it as renting the money, right? You do rent money. It's interest expense. Okay, how much? Luckily, we don't call it interest rental expense. Okay, all right? Good? Okay, I want to add something else. You were supposed to do that. Both of you guys. Let me work your problem. Well, I guess we're going to help you. Jeez. We'll do you next and see if you can actually work one. Yeah. You have to answer them instantly, like you're going to do on the quiz test. On the quiz, you don't have to have them instantly. You can think about it a little bit because you need an hour to do about half the test. What's going to happen when we do the test on Friday? Twice as much. How well do you need to know it? Twice as much in the same amount of time. You can't sit and think about it, can you? And I understand while you're learning it, you have to sit and think about it. But on Friday, you know this stuff, right? to use it in your career. You're going to know it for the final if you know it Friday. I bet you anything. Wow. See the cumulative effect of this thing? I've never seen anybody get 90 on one of the tests and then get 30% in the final. Ever. It's never happened. I've seen people get 30 on one of the tests and then get 60 or 70 in the final one. The percentage. Really serious. Because they did nothing and then they got to work, right? It's hard to unlearn things after you learn. You got to work at it. Although I'm frustrated with my intermediate students because they always seem to manage that. They take 101, do really well, or they wouldn't take 211, right? And then they get into 211 and they don't know it anymore. Never do a brain dump again as long as you live, right? Don't intentionally get rid of your knowledge by just forgetting about it because the class is over. You guys were talking about econ. Do you want to remember that stuff? Yes. Yes, yes, yes. You want to know it, okay? You don't have to love anything. You can pick and choose what you love. Although it's easier to learn and pretend you love it while you're doing it. And then as soon as it's over, you can say, that sucks. That's good. And you still got your A or B on your transcript. You don't relax. But you don't forget about it. Somebody's going to expect you to know it someday. All right, I want to do one more thing with this. I want to pay it at the due date. September 30th of the next year. Okay? I'm going to let you redeem yourself. Let's pay it. What do you want to do? What are you going to debit? Let's give me the accounts first. What are you getting rid of? Yes, excellent. In fact, we can go ahead and do that amount. What's the whole note payable? It was 18, right? Okay, good. What are we going to pay it with? Cash. Everybody agree with that? We have to figure out how much cash. What else are we going to debit? Interest payable. I'm going to pay off that payable from last time. I like it. Good job. How much is the interest payable? 540. I'm going to pay it off. If you owe it to them and then you pay them, you don't owe it anymore, you debit it, right? That's true for the note payable and the interest payable, isn't it? Same thing. Okay, but there's more interest, right? What are we going to call that? The interest for the other 9 months, I guess it is, right? Interest expense. Excellent. Look at this. There's 4 lines in this journal entry, and it's easy if you understand what's going on. So how much are we going to pay them? It's going to be 18,000 times what? 12%. And that's going to be it, right, for the interest. So we're going to pay them the 18 grand plus the interest for a full year, which is 12% of 18,000. Everybody agree? How much is that? 1,6.
The total or for the 9?
Just the interest. No, 12 months.
12 months. It's 2,000.
Oh, that sounds better.
2,100.
Okay, 2,160. That's going to be the full amount of interest we pay them. Everybody agree with that? So you're going to give them 18,000 of principal, paying out the note, plus 2,160 of interest. Everybody agree? You good, huh? You can do this. How much is that? Okay. I guess the interest expense is the rest. Absolutely it is. 2,160 was a year. How much is this going to be, though? 9/12 for the interest expense this year. 3 months last year, 9 months this year makes 12 months. It's a 12-month note. Right, guys? 1 year? Nothing to it. What's 2,160 times 3/4? Times 0.75. How much is that? What'd you say it was?
1,600.
1,620. That's the interest expense. Does that journal entry balance? You bet it does. We're brilliant, aren't we? So if I give you something like that, is that okay? I know the author hasn't done it yet. Who cares? You can figure it out, can't you? So those are the kinds of questions that determine if you're an A or an A minus or a B plus. Being able to pull these off, right? Okay, good. It's not a big deal. Okay, well, let's do something else. You know what? If you're still having trouble with the debits and credits, you're probably not here if that's the case. Didn't come today. But if you are here and you're having trouble with those, let's get together and let's fix it now. Now. Right? We're going to long by that. Okay? I think I still have how do you increase and decrease accounts on this test. Some of the multiple choice are really ridiculous. How do you rent expense? How do you increase it? The expense account? There's like 4 or 5 points like that. Maybe 10 in the test are going to be no-brainers for you. Be sure you get all those. Look around for the stuff you know how to do. Okay, so let's try another one. Cash of $3,000 was collected on November 1st, 2014 for services to be rendered evenly over the next year by beginning on November 1st, okay. Oh, let's see, depreciation, oh, this one's too easy. You get it. Okay, depreciation of 2,500 must be recognized as a service truck purchased July 1st at a cost of 15,000. Okay, tell me what the journal entry is first.
You're gonna want to put the truck for a debit and then the cash for credit.
Oh, well, they don't ask for that, that's what they would have done.
Oh.
Trucks or delivery equipment, when they bought it, right, was how much?
That was 15,000.
And then cash or notes payable or both or something, right? Whatever we gave them for it, okay? Either pay now or pay later. Okay, that would have happened. Okay, and then at the end of the year, December 31st, what would you do? Figure out how much of that you've used up and debit what?
Depreciation expense for debit.
Excellent.
For credit, it's depreciation accumulation.
Accumulated depreciation.
Yeah.
Okay, everybody, that's not accumulated department. I get that all the time because I do my small r's like that and everybody thinks it's a D. It's not accumulated department. I don't know what that is, so please don't call it that. It's accumulated depreciation. I really do get it all the time. Just laugh. Especially like on the final people who didn't know what they were doing and then tried to get it at the end and they're reading other people's notes or something. I don't know. Watching the videos or something. Anyway, so, all right, how much was that?
It's 2,500.
Okay, real quick, I want to know how many years the life is, assuming it's straight line, no salvage.
So that's
You get 6? Really? When did they buy it?
They bought it in July 1st.
July 1st, so this is only 6 months. So what would a year be?
It'd be 5,000, so 3 years.
Would have been 5, so it's 3, gotcha. Okay, so it's 3 years, isn't it, guys? Could you answer a question like that for me? Sure, why not? It's easy, huh, if you know what you're doing. Okay, good. Let's see. The next one, go on down. On November 1st, Zimmerman paid a, whoops, no, let's skip one. Cash of $3,000 was collected November 1st for services to be rendered evenly over the next year beginning November 1st. Unearned service revenue was credited as the cash was received. Fine. So what was the journal entry then at November 1st? Oh, by the way, was this last one an accrual or deferral? We don't usually think of it that way, but what did they do when they bought the truck? Did they expense it or record it as an asset? Recorded as an asset. Looks like they deferred the expense until later when they used it. Right? It really is a deferral, isn't it? It is. All assets are except for land you don't use up. Got it? We don't use, I won't ask you a question like that, but it is, isn't it? It's the same thing. It's like prepaid. Does it make any difference if you rent a piece of equipment or you buy a piece of equipment? Don't you use it up either way? It becomes rent expense if you're renting it. It becomes depreciation expense if you bought it and used it. Okay? It's a different way. You guys do know that if you lease a car, you still have to pay for it, right? Or if you buy a car, you still have to pay for it. Funny how that works. Okay? Students ask me, and previous students, should I rent a car or buy a car? You know what my response to that is? Which one has a lower interest rate? That's how you decide. For some reason, car manufacturers love to do this, and dealers. They love to, I think they were trying to trick us all, right? You know, they love to convince you to buy a car with a real low lease payment. But they'll make the interest rate high and give you a low lease payment. By having big payments at the end, big payments at the beginning. You think, oh wow, this is a great deal. Compute it. Oh, you don't know how yet. When you're done with this class, you will. You can figure out exactly what your interest rate is without them telling you. Okay? Nothing to it. Okay? Really, it's just time value of money. That's all it is. All right, anyway, we're going to do that in a while. So, what would the entry be on November 1st? What did they do? Debit what?
Extra 3,000.
Doesn't want to do the problem? Just being defiant? You were next in the row.
I was next?
No. This gentleman here.
Me?
You didn't do it, did you?
I thought you pointed him.
Oh, no. I'm just going down the row.
Oh, you
You haven't figured that out yet. You're not an ordered person. You're kind of like me. Just yeah, okay.
Sorry.
I like that. Debit cash.
Debit cash, credit, unearned service revenue.
Yeah. And I could have told you it was a balance sheet account or something. That's fine, right? Okay, good. And then it's now December 31st. How long were they going to earn that? It's going to be 1 year. So how many months went by? That's 2 months. What would that be? 3,000 times 2/12? The sixth of it? How much is that? 3,000 divided by 6. 5. Okay, what do you want to do? Absolutely.
500 in credit service revenue.
Nothing to it, huh? Okay, and this thing was a deferral or an accrual? What did we do? Deferred or accrued?
Deferred.
We deferred. We deferred recognized it until later we earned it. Okay, I want to do it differently, okay? What if they had recorded instead to a nominal account? What would the entry have been if they had done it this way? On November 1st, what would the entry be if they recorded the cash receipt, of course, and then they recorded it to a nominal or temporary account? That's an income statement account. It'd be debit cash, 3,000, good, and credit what? Service revenue. Now what I'd have is in service revenue, I would have the whole 3,000, wouldn't I? What would I have in unearned service revenue? Nothing. Where do I want to be when I'm done? Well, how much did you earn? We decided 500. I want this to only be 500, don't I? How much did I not earn, of course? 2,500. Is there anybody in the room who can't figure this out? Nothing to it, huh? How did you get down from 3,000 to 500, everybody? Debit at December 31st. I would debit what? Service revenue, because it's too big. I want it to be smaller, so I bet I could do that. Okay, 2,500, right, guys? And credit what? My voice is changing, puberty or something. Okay, anyway, here we go. 2,500. There we go. All right? I've got it. What do you bet I give you both of these on the quiz or test? Huh? Both approach. Think. You got it made. Don't try to remember. How can you remember what I wrote down? I wrote it down. You didn't. I don't even remember it. How could you? Okay, don't try to remember it. Figure it out and do it. Okay, what do we got on the next one? November 1st. We'll keep going down the road. On November 1st, 2014, Zimmerman paid a one-year premium for property insurance at $9,000. Coverage starts on November 1st. And he can tell you they went to prepaid insurance, which is the asset account. We'll do this one both ways, too. Okay, what do you want to do? On November 1st, what did you do?
Prepaid insurance was covered in.
Prepaid insurance. How much was it?
99,000.
Okay. Credit.
Cash.
Now, you don't have to do this part. The problem didn't ask for that. It asked for the adjusting history, right? December 31st one is all you need, really, right? You're doing the quiz for me, your test. I don't need that. They're just telling you what they did. So what would you do at December 31st? This was for how long, guys? 1 year.
1 year.
I guess we'd use our prepaid insurance evenly every month, most likely, huh?
Yes.
So 9,000 divided by 12. How many months went by? That wasn't January 1st, was it? November 1st. 11 months. Okay, how many months went by? 2. I don't know why the author on this question stuck on 2 months. November, December, 2 months, right? So it's what? 2/12 of it? 1/6 of it? 1/6 of 9,000 they've earned? Everybody agree with that? Debit what? We used it up. What is it when I use it up? An expense. For insurance. Insurance expense. Yeah. Everybody agree?
Yeah.
What don't I have anymore if I used it up? The asset, prepaid insurance is gone. How much did I use up? 9,000 divided by 6?
Yeah,
Times 2/12? 1,500? Absolutely. How much is left in the prepaid account? 7,500. You had this, right? You had prepaid insurance. Put 9,000 in there, right? Insurance expense has nothing related to this policy. There might be a lot of other insurance policies, right? Okay. What did we decide? We used up 1,500, didn't we? How much have we not used up, obviously? 7,500, right? 9,000 less 1,500. And that means prepaid insurance needs to be credited for 1,500. That's why we did that. And insurance expense needs to be debited for 1,500. That's why we did that. Okay? Use T accounts if you want, or if you don't need them, don't. Okay? All right, let's keep going. That would be if I went to the balance sheet account first, which would be a real or permanent account. Oh, by the way, is that a deferral or accrual? Deferral. What am I deferring? Insurance expense. Yeah, you got it. Absolutely. Okay. By the way, what would be an accrual of insurance expense? I incurred the expense, but I haven't paid for it yet. Give me the journal entry. Debit what? If I was going to accrue insurance expense. Debit what? Insurance expense. Credit what? Insurance payable. Yes, we're there. Huh? You can do it with anything. Rent, insurance, interest, salaries. Wow, cool, huh? Did you understand? You got it made. Okay? All right. So let's do it if this will be or we go to an income statement account. What would they have debited if they were going to go to an income statement account, of course?
Insurance expense.
Insurance expense. For how much? The whole $9,000. That's what you paid, right? That would have been instead of this entry. And credit what? Whoop, 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 whoop.
No,
Not a payable.
Payable.
Cash. Okay? That would have been the accrual. I'm doing my best to confuse you, and I'm doing a good job. Doing it on purpose. Okay? Think. Okay, debit insurance expense, credit cash, huh? Okay? Then what? Here we go, guys. Insurance expense has what in it? $9,000 if we do it this way. Prepaid insurance has what in it? Nothing relating to this policy. What do you think? How much should you have used up? Seeing as only 2 months went by. So expense should be only $1,500 for the 2 months we used, right? What should be in prepaid, seeing as we did not use up, $750 a month, everybody. Got it? $750 a month, isn't it? There's 10 months we didn't use up. What should be in prepaid? $7,500, right? How do you get there? Credit. Debit. And that's what you'd write at December 31st, right? Just from where we are to where we want to be every time. So debit what? Prepaid insurance. And credit what? Insurance expenses. We end up exactly where we want to be. Okay? We got total control, you guys. All right. So what do we have left? The company earned service revenue of $4,000 on a special job that was completed December 31st. They're not going to collect until January 15th. What do they have?
Okay, so they've got accrued revenue because
They're going to accrue revenue, absolutely, excellent.
So they're going to debit accounts receivable for $4,000
Got it.
December and credit service revenue for $4,000, and then in January they're going to debit cash for $4,000 and credit accounts receivable for $4,000.
Yeah, you got it all. Fantastic. Right? That's the entry at December 31st. That's what they wanted. But he's absolutely right. When they get paid, what do? Debit cash, credit receivable, huh? Please don't credit receivable when you accrue it, and then, or debit receivable and credit service revenue when you accrue it, and then when they get paid, debit cash and credit service revenue. You're double reporting your revenues, aren't you? Overstating your income. Profit would look real good, just wouldn't be real. Okay? Excellent. It's a great idea. Okay? It's got it all. And then, yeah, absolutely, that's an accrual. Okay? Good. You didn't read ahead and solve that, did you? You listen to what we were saying on these other ones. I'm kidding. I don't even care if you did, but yeah. Okay, let's see. Gee, at December 31st, wages earned by employees are $14,000. They're going to be paid next payroll date. What do you want to do? December 31st? They haven't paid them, but they did the work for you, right?
Wages expense,
You have wages expense. Why do you have wages expense?
because they did the work.
And you've used it up, right? So it's an expense. Absolutely. That's it. If we paid them, what would we credit?
Wages payable.
Well, no, we're not paying them, so it's wages payable. I agree with you. But what if we did pay them? What would we credit? Cash. What if we had paid them last month? What would we have to be crediting them? Prepaid wages. Right? Because last month we would have debited prepaid wages and credit cash. And now when they earn it, we use it up. We would debit wage expense and credit prepaid, huh? Oh, by the way, what's going to happen next month with this one? Same deal. But is this an accrual or deferral? It's an accrual. Why? We haven't paid cash out yet. We have the expense, right? We're recording the expense. We used it up, but we haven't paid yet. So I'm accruing the expense. And wages payable is an accrued liability. Got it? Okay. What are you going to do when you pay it next month?
Wages payable.
Yep. Because I don't have the liability anymore. Credit what? Cash. Boom. Okay. This is easy, isn't it? Even I could probably do this. Okay. Anyway. On December 31st, 2014, the company estimated owed $500 in property tax on the land. Tax will be paid when the bill is received in January. Back over here again. What do you think? What's that going to be? It estimates it owes it. So what is this? Property taxes. You have to pay your property taxes to stay in business. Yeah, they're going to take your property away from you. It's not. It's kind of hard. Imagine Walmart had all their stores repossessed because their land buildings because they refuse to pay taxes. You have to pay taxes. It's one of the costs of what? Running your business, which means what? It's one of the costs that you incur to generate revenue. So what do you want to call this stuff? Property tax expense. Absolutely, I think so. Absolutely. Property. Oh, sure, whatever. Property tax expense. How much was it? 500. You haven't paid it yet. What do you think it is? An estimate of property tax. Pay. Accrual or deferral? Accrual, okay. And what will you do when you pay it off next month? Debit, property tax payable, credit. Yeah, okay. You have a really nice, soft, pretty voice. That's it. I want you to say something loud. Say accrual for me. I want that person sitting back there in the back. I want her ears to her, like when I want to hear you say accrual again. Shout it. Okay, when you go to watch a basketball game, you have basketball games in Bellarmine? No? Are you into sports at all? Do you ever go to a concert? You been to a concert in your life? Okay, that's how much noise you made at a concert. You just, no, I can't do that. Okay, I know you're loud now. Say accrual so everyone can hear it.
Accrual.
No, that's not very good. You.
Accrual.
That's better. You.
Accrual.
Oh, there you go. They're all women. I don't think she's less feminine because she can actually project her voice. I think she sounds more like a business person. Right? Maybe it's because it was a male-dominated world and women have more recently joined. I'm not kidding. In the business world, there are still men in responsible positions and more men than women. If you are quiet, you won't be a player. I don't mean to become obnoxious. Don't change your personality, please, and don't change your voice. But again, Max, that I know you got it. You got the vocal cords in there. Have you ever sung something? Have you been a singer? No. All right. She just does quiet stuff. Okay. You play chess. Okay. All right. All right. Let's hear you. See if you can hear it. Go. Say a word. Say your name real loud.
I'm Courtney.
That was better, wasn't it? Okay. You know what? We have a student who's one of the top people in our junior class who is exactly like that, and now you can't shut her up. It's just really annoying. No, it's just cool, right? But you know what? In a personal setting, in an individual setting with people, she's still really quiet. I don't mind sitting and talking to her at all because she's not yelling. I have to tone it down, when it's one-on-one, right? But in a meeting, she's in charge. She's up in front, controlling. That's you, okay? No, louder than that. Better. That's good. Okay. You work on it. I'm serious. Get in front of a mirror and work on it. Everybody else who's quiet, guys too, right? It's worse for a guy to be quiet because you're supposed to be noisy if you're a guy, right? Stupid stuff. But really you have to project. Honest. They have to hear you or they won't listen to you. You guys don't listen to me even make all kinds of noise, right? What if I was standing up here going like this? Ever had a professor like that? Yeah, we all have. You're like, oh, for God's sakes, I can't hear a word you're saying. All you're doing is you're reading your notes to me, I actually have had professors where I asked them if I could have copies of their notes. And they get mad because they know what I'm saying. Just give me the notes, I'll read them myself. Right? All you're going to do is read them to me. What the hell? Should They're not online, and we never have class, don't you think? You're just going to read the notes to us. History classes sometimes. Not at Bellarmine, I don't think. I think at Bellarmine they're kind of noisy historians. Yeah, at least they are one-on-one. Okay, anyway, so that was an accrual. Good job. Okay, great. All the right answers, they just couldn't hear them. Wouldn't it be terrible if you were in a business meeting and you were with her and you did all the work, she answered all the questions, and she got the promotion? That sucks. Don't let her have your promotions, okay? Because she doesn't know anything, and you. That's a joke, everybody. Yeah. You shouldn't be so mean to our students. I get faculty tell me that all the time. Okay, I want you guys. So we did all the accrual and deferral. Let's do the part where you talk about what happened in the accounting equation. Let's do this, okay? So let's go down through here. That worked good. Meant to do this first. On. Okay. Get back here. And here, maybe. Okay. All right. So let's do the first one. I guess it's all the way up. Is that the first one there? Cash and unearned revenue. All right. Let's go through what happens as a result of recording this. This will be on the quiz test final two, just to make sure you know what you're doing. Sort of my goal here, I guess. All right. Find out if you know what you're doing. So this first journal entry on September 1st, that first one, what would it do?
Increase assets, increase liability.
Everybody see it's increasing in asset cash? Okay. And it's increasing liability, unearned revenue. What did it do to everything else? Nothing. What if you fail to record it? What would be wrong?
It would be understated.
Assets would be understated. Liabilities would be understated. And what would everything else be? No effect. Is this easy or what? If you know the journal entry, you got it made, don't you? Oh, well, what is this journal entry that we made here? This is the adjusting entry. What would it do? That's what we really would be answering. But that's what the first entry would have done, the source entry. But what would our adjusting journal entry down here do? What would that do, everybody? Debit unearned revenue. What does that do? Decrease the liability by 5,600. What else happens? Increase revenue by 5,600. What does that cause? Increase in net income by 5,600. What does that result in? Increase in retained earnings, which is an equity account, by 5,600. Boom. Remember when this used to be easy a week ago? I mean, hard a week ago. Easy a week ago, hard 2 weeks ago. Okay, remember? Now it's a piece of cake, isn't it? Keep it, and relax when you do a quiz or test. Just relax. Take a deep breath, sit down, and do it. Right? Just keep moving. Keep moving. Never worry about what you didn't get done. Worry about what you're doing. Okay? Right? Don't worry about what you're not getting right as you go. Worry about working. When you're at work, too. Work. Worry about how it all went later when you see your bonus check. Okay? It's kind of nice. Okay, anyway. All right, guys? That's easy, isn't it? It's a piece of cake. Oh, how about this one for over-understated? I fail to reduce it. What would it be if I don't do it? Overstated. I fail to reduce it. No, overstated still. Fail to reduce equity. I fail to increase revenue. That's understated. Oh, understated. Consider wrong. Fail to increase it. Understated. Make it a face. What is he talking about? Yeah, I failed to make it bigger. Understated. Okay, sorry. Understated. Understated. We got it. This overstated on this side plus this understated on this side equals what for total assets? No effect. Everybody got it? How about expenses? No effect, of course. You know what? If you don't debit or credit an expense account, you didn't change the expense account. That's all we're saying. If you don't debit or credit an asset account, you didn't change it. That's all we're saying. We're creating these statements. We're adjusting the statements after all the source entries create them, right? And then we are adjusting them with the adjusting entries. Make sense? Okay? All right? Let's see if Keith can screw up another one. Let's do this one. Let's do just this part of it. Okay, just the adjusting journal entry. What does that do, guys? Debiting an expense. What happened to the expense? I think it went up. How about you guys? That journal entry would make expenses higher. What else would it do? Well, that decreased net income, which would do what to equity? Decrease it. And what else? What's the credit to interest payable going to do? Increase liabilities. This is too easy. That's it, huh? Okay. The effect on assets and on revenues would be what? Nothing. Okay, obviously. How about overstated and understated? Nothing on assets and revenues, right? Liabilities should be higher, they would be, yeah, make sure I do it right this time. Okay, equity should be less, it would be with that understatement plus that overstatement net out to zero, of course it would, right? Okay, and then revenues, nothing, expenses? Net income? Ta-da. Okay, we're good. Well, let's do another one. Let's do the depreciation. That's all they're asking for in those problems, huh? Okay. What's going to be the hard thing on the way I give them to you? You've got to get the journal entry first, don't you? Yeah. The hard thing is figuring out what happened. Business is hard. Accounting is easy. Can you guys tell left from right? Right? You have 5 accounts. Sort of 10, right? Contra accounts. Yeah. Okay. So let's do this one. All right. What is it? Debit depreciation expense, credit accumulated depreciation? Increase expense. It's not a liability. That's an asset, right? Contra asset. As I increase that asset, what happens to assets? Goes down. But it's going to be equipment less accumulated depreciation, right, guys? Or building less accumulated depreciation. So you make the depreciation higher, that contra account, it's going to make your assets lower. It's a little harder to get it. Okay, everybody agree? What else happens? Nothing to liabilities, nothing to revenue, so therefore what happens to net income? Decrease, which causes what? Decrease in equity. Oh, and that'll keep you from screwing that one up, huh? Because if I have nothing on liabilities plus a decrease in equity, what does that have to be for assets? Decrease. So you'll catch yourself with this. See what I mean? It's kind of handy, isn't it? How about overstated and understated? If we fail to reduce this, it is overstated. No effect. Overstated. No effect. Understated and overstated. Okay. People have told you this is a hard class, haven't they?
Yeah.
They're wrong, aren't they?
Yeah.
It's kind of wrong. Sorry. So where were we? Did I go too far? Set that down, it works better. Yeah, I don't know why that would be, but it does. Theoretically does. Come on. All right, we did all those. Doesn't want to go just a little ways. It wants to go slow. All right, what do we got? Debit unearned revenue and credit service revenue. This one right here, I guess. We'll do that one. You could pick any of these, couldn't you? Nothing too easy for me to write exam questions. All kinds of things we could do. Okay, what would a debit unearned service revenue do? Debit unearned revenue. Decrease liabilities. All right, guys? Okay, credit service revenue, what would that do? Increase revenue. What happens to assets? Nothing. What happens to expenses? Nothing. What happens to equity? It must be increased. How did that happen? You have more net income, which causes retained earnings to go up. More equity. Okay? Well, you guys want to leave early or something? Really? Let's do one more. Let's not leave early. You're going to make me do review sessions and then leave early. I don't like that. That's mean. Okay, anyway, so let's do one more. Let's do this one right. Right. No, that one I was... oh, we can do that one. Yeah, let's do that one. Why not? Let's do that adjustment. That's if we did it the other way, you know? In fact, I want to do one more thing, real quick. Let's do both of them. What's the impact of both of those entries? Okay, so this one debited cash and credited service revenue. What did that do? Increased assets by $3,000. Everybody agree with that? Okay, and then it increased service revenue by $3,000. Okay, everybody agree with that? That's the two of those. Okay, what about debit service revenue for $2,500? That reduces service revenue $2,500. What did that leave me in service revenue? Increase of $500. Everybody agree? And then what happened to unearned service revenue? Increased liability by 2,500. Oh, wait a minute. What do I need? I need an increase to equity for 500. How'd I get that? No effect on expenses, right? So you have 500 more revenue. What does that do to net income? 500 more. What does that do to equity? 500 more. Is 2,500 plus 500 equal to 3,000? Yes. Doesn't matter how many entries there are, huh? As long as the debit's equal to credit. True. See you guys. Work. How many are going to make it today? At least one? Nobody else is committing? You have a class at that time? Even the 1 o'clock ones?
Well, like, the next one we did is the only one that's on the schedule at 6
Yeah. I can't do Tuesdays or...
All my classes are.
And my wife will kill me if I do